Hello, everybody. Welcome to today's webinar on value pricing, the journey, and what to expect. As you can see, we've got a great house of folks today. Wayne Schmidt, who's joining me and working with me, as well as Blake Oliver, Jamie Johns, Jason Blummer, and also Chad Ridner. Before we get started, for all of you out there, if you're not familiar with GoToWebinar, you'll see the control panel. That's your lifeblood. You can ask questions along the way. I'll be answering them. Close down to the applications that use bandwidth, and we will be spending some time at the end for Q&A. We do have a Q&A baked into this panel discussion already, but we will be opening up to the floor at the end. Next slide. Wayne's my partner in crime over here, as you can see. We're today, next slide, Wayne. We're talking about value pricing. This is in joint with Intuit in regards to the Firm of the Future webinar series, what we've been doing in February. This is the fourth in this series. We've covered the 10 steps of value pricing. We've talked about bundling strategies. We've also talked about the pricing and bundling, and this is the fourth bit. I'm Ian Vason, VP of Product Marketing here at Carbon. I've been in the industry for 15 plus years, in technology 25 plus. I have worked in Intuit before for 10 years, leading the Pro Advisor program, and I'm joined here with my partner in crime from Carbon, Wayne Schmidt. Wayne, you want to introduce yourself?
Thank you so much, Ian. Yes, my name is Wayne Schmidt. I've been working in the accounting industry all my life. It's a bit sad, really. 28 years working with accountants, talking about accounting software. So I've seen everything from, the rise of to now where we're moving cloud. My remit is to help accounting firms grow. Leveraging things like technology, talking about what's happening in the trends, especially in Australia. We've moved significantly to the cloud already, so most firms have already moved all their clients onto cloud accounting, and so what we're trying to do is impart some of the knowledge from what's happening in Australia and the good, the bad, the ugly, and see what we can do to help everybody out there, leverage cloud accounting.
So as a context, what we've been talking about for this February series, next slide, Wayne, is the 10 steps to the cloud. If you are not familiar with who Carbon is, we're the place to collaborate with your team and look after your clients. We bring everything together in terms of your email in one place so you can collaborate together as a group and ultimately to get work done. That's fed by timelines that brings it all together. Your contacts are managed in one place. Checklists help you get the work done. To-dos help ensure that everything's done on time and on quality, and everything's searchable to be able to find what you need. If you need to learn more about Carbon or to get a demo, go to carbonhq.com/events to get a demo. A little bit of a recap. These are the 10 steps to the cloud. If you want to learn more, go to Intuit's Firm of the Future, firmofthefuture.com, and you can find the webinars that we've done prior and some articles regarding 10 steps to value pricing. Today's conversation, we've got ourselves a fantastic panel of folks. We've got various folks you can see on their video cams. We've got Blake Oliver, Chad Ridner, Jamie Johns, Jason Blummer. I'm going to have each introduce themselves. So again, we're going to start off with Chad because we're not sure if he's quite here on the line. So Chad Ridner from Two Roads, are you there? Chad is still trying to get back online. So Blake Oliver, we're going to go to you first. Blake, give us a 20-second, 30-second description of what HPC is about and who you are.
Sure thing. HPC is an online full-service CPA firm, and I say full-service even though that's a bad word these days in a marketing perspective. I head up marketing and technology. We specialize in particular with working with global small businesses and helping them come to the United States. So that's sort of a niche that we've grown into. Before HPC, I founded an online bookkeeping company called Cloud-Sourced Accounting and grew that to have several hundred customers, and then HPC bought us. So now I'm part of HPC and really having a great time.
Thanks for joining us, Blake. Next up, Jamie Johns, out there from Australia, from Sky Accountants. Jamie, give us a little bit of background on yourself and Sky Accountants.
Hi, I'm Jamie Johns. I'm the CEO of Sky Accountants. We specialise in hospitality and the vertical of cloud accounting. We've got staff in the Philippines. We're based in Victoria, and we have clients all over Australia. So that's about it. Yeah.
Perfect. And then the one to take us home here on the east coast of the U.S., since we were crossing the globe, it seems, Jason Blummer from Blummer CPAs, with the awesomest mic of the bunch. Jason, talk to us. Tell us a little bit about what you guys do.
Yeah. Sorry about my obnoxious mic. It's my podcasting mic, so it is kind of obnoxious. I apologize. So I've been running Blummer CPAs for about 12 and a half years, and we're a virtual firm, so we use pretty traditional and bill by the hour and have offices, and we closed all those and messed up a whole bunch of stuff in the process of doing that. So that's how you learn your lessons, though, I guess. And we serve digital design agencies all over the U.S. That's who we serve as a vertical.
Perfect. And who's just shown up from being dropped off at the last second is Chad. Chad, we tried to redeal a bit earlier, but thanks for coming back on. Give us a little bit of a description of Two Roads and yourself.
Technology is great when it works, so sorry for the delay. Two Roads, we're a bookkeeping and tax shop in Knoxville, Tennessee. We've got a team of 18, specialized medical in the restaurant verticals in particular, and are thankful to be along for this conversation.
Chad's also one of the Intuit's Firm of the Future, too, so thanks for joining us, Chad.
Absolutely.
So let's get this party started. How about that, Wayne? Let's go to the next slide. This is where I hand it over to our moderator, MC extraordinaire, Wayne Schmidt. Wayne, you want to take it over?
Yes, well, thank you so much, Ian. So one of the things we're going to be talking about is, value-based pricing, and that can mean multiple things to multiple people. Because one of the things that we notice is that terminology, there's a distinct difference here in Australia about value-based pricing and fixed fee pricing and hourly pricing and hybrid models and whether you have options and all that. So one of the things is, and you've brought up some of the examples of some of the firms that are out there that are doing different types of pricing. So, Ian, you were discussing with me how you saw the world with the 5 products. So quickly summarize for me back, and then we'll get into some of the questions.
Yeah, so again, you might be starting from hourly-based billing, which is typical. There's cost-based pricing, there's fixed pricing, there's fixed fee billing, and then there's obviously value pricing. So over here we gave 3 examples, and we're going to talk to everybody here on the panel about what they're doing. But we've got Jimmy Johns is over there on the left on Sky Accountants, which is a fixed fee, which is a stated upfront price, typically same month over month. From the same client to client. Then you've got in the middle here, you've got 5 Ways Group from Paul Meissner, who's doing a hybrid because he's starting from a from price per month and adjusts it based on client and client needs. And then you've got Chad Davis over at Live CA, who does a true value pricing model, similar to also Jason, who's going to talk a little bit later. Every single client, every engagement is priced individually based on the value that's obtained from both sides of the equation. So again, there's a variation that exists. Value pricing is a little bit generic in terms of what people say, and you're going to see different versions of that today, even on the panel.
Yeah, and I think it's great because one of the things that I like to have a chat about is just to get that whole, because there is a bit of confusion in the marketplace because there's different terms bandied about and how people are doing it. So one of the first things I'm going to throw to you, Jamie, is, what I'd like to know is how are you billing? Are you doing value-based pricing or fixed fees or hybrid or hourly? What's your process?
Yeah, Wayne, we're doing pretty much all of that. We're doing a mixture of all of that. However, 90% of ours would be, fixed fees and monthly sort of payment. So we allow for some time billing and some mixture of both as well, but at a lesser extent on the last 2.
Mm-hmm.
Yeah.
Jason, your model?
So yeah, we do value pricing only, and so I don't know if I should talk about, there's no right way. It's really, every way is very difficult. So the value pricing model is very time, there's just so much time you got to invest up front with a client. So we have another division we just launched recently, and we're playing around with fixed fees so we can limit the amount of time up front that we have to spend with a client, which sounds bad, but we're trying to move the revenue into the firm faster. So it just depends, how slow you want to onboard clients really as to what you want to do.
Actually, Chad, when we were discussing at the start, I can remember that you said you weren't ever charging by the hour. Is that correct?
Yeah, that's correct, and that's partly because when I started a different business back in my early 20s, and I remember what it was like to be on the receiving end of hourly billing, and we thought, if we start a company down the road, I really want to be advisor, somebody that's not just a transactional relationship or a vendor. And so, yeah, right from day one, we started value pricing. And as time has gone on, I think it starts to look more like fixed because you get more comfortable as you see more and more data over time. But yeah, we still do value pricing today.
And Blake, I think you started straight away on value-based pricing or fixed fees.
Yeah, so we started with fixed fees, and I think it was really critical when we hired a sales guy who just does the sales to have that sales catalog in place. It made my job a lot easier reviewing his work and the proposals he was sending out because he would just tell me about any deviations he made from that catalog we'd put together. And at HPC, we do the same thing. We have a set of fixed fees that we use, a catalog that we use to create proposals and figure out a total price for the customer. One area where we use value pricing is in cloud integration or consulting engagements. If we are putting together an engagement or a set of applications that will save the customer X dollars per year, then it makes sense to use a value pricing model and say, well, you're going to get a 5 times return on investment. If I'm going to save you $10,000 a year by changing your credit card processing to ACH and whatnot, then I'll charge you $2,500 to do that. You'll get 4 times return on investment in the first year, and then after that, it's just gravy. So those kind of engagements where you can actually create value that's tangible and it's not just compliance-based is where we like to use value pricing.
Cool. I just wanted to get everybody so that we're listening to this to understand that, as Jason said, it's finding the right pricing model that suits you, and also seeing what's happening in the industry and suits your clients. But actually, you don't actually have to just follow one. However, I think underlying everybody here is the majority of people are moving away from just an hourly billing mechanism. One of the questions I wanted to straight away is, why change? Look, hourly's been around for years. Doctors do it, lawyers do it. In the accounting industry, we traditionally do it. Why change? It's a big change. Jason.
Yeah. Well, at the time, I guess in 2008, we switched away from hourly pricing to value pricing, and I was, being influenced by people like Ron Baker, and when you read his book, Implementing Value Pricing, it's a pretty difficult text, but he really does convince you that it's just best for the client, that you really, if nothing else, no matter what model you're using, just price up front, help build trust with the client, help them know. And I just started to feel like we were doing it wrong by billing by the hour. I just felt like I wasn't doing all that I could for my client, and there just came a point where we uninstalled the time and billing system. Of course, that's when everything blew up on me. But I felt that's how I do things. I kind of uninstall stuff and blow up everything on everybody's desktop, at that time. So I didn't feel like I was doing justice serving the clients anymore. I felt like I had to. So I just felt bad about how we were doing it. So we changed.
Just to give us a little bit of, changing that. Jamie, you went from hourly.
Yeah, that's right, Wayne. Yeah, look, a little bit the same as Jason. I just felt that just straight up it was just transparent to price up front. I'd worked in numerous firms before I started Sky, and I just time and time again remember seeing partners having fee disputes about clients getting unexpected bills, and it took longer than we said, and so managing the expectations was pretty poor to a lot of the extent of the time. So it just felt right for myself and my business, just to be transparent, and as Jason said, just price up front, and it drives accountability right from your client managers, right through the business. So it was right for us. But just probably a key point, I think it's all what this whole thing is about managing client expectations. So whether you do a hybrid or you're doing some time billing, as long as you're managing the client's expectations and you're on the same path and aligned, then you can't really go wrong. But fixed pricing up front for us was just the way to go because it was transparent, it was clear, it was productized. Everything we have is productized, and when it's productized, I don't have to sell it. Like my staff can sell it. So yeah, that's our experience.
All good. Chad or Blake, do you want to add to that, or we'll keep moving along?
Yeah, I think for me, whenever you get a situation where a client could be thinking, should I Google my question because I know there's a bill attached to this conversation with my professional, that's a problem. So we really felt like that's where that transaction relationship takes place. When your client sees you as a trusted advisor, a partner, somebody, an advocate in their corner, I really feel that value pricing, fixed pricing, the hybrid model really helps you get to that place much quicker.
I would add one thing, which is the bookkeeper perspective, because now that you mention it, I did at one point charge hourly when I was just starting, when I was in school. I was doing bookkeeping, and I did a Bill.com implementation, and at the time I was doing accounts payable for 5 different companies, driving around LA and cutting checks in their offices. And so I did that implementation to save myself time, and I cut it like in half. The accounts payable was like in half, and I was billing hourly. So all of a sudden I had improved the process, my clients, and I was working less and making less money. So I had to switch them to fixed fees as soon as that happened. And it wasn't like I had planned it out. I just realized, oh crap, I need to fix this.
Because one of the things I talk about when I look at this, the fee model, the hourly model is entirely broken. I think it's just completely broken because I sit there as a client and I go, so how do you make money? Oh, every hour I bill you. So basically your model is I should just go slower. I should not be like trying to be efficient
at all.
Yeah. There's no underlying fundamental to say, how can I'm a change champion. I'm not like Jason, I'll jump off a bridge if it requires, something like that. But it's about fundamentally changing that conversation you have with the client. All of a sudden you're going, well, I'm going to add extra value to your business, but you've got to still make sure that you're being rewarded. Hey, Jamie, Adam's asked a good question here. How do you see the fixed pricing driving accountability on client managers? You talked about that, driving accountability. Just a bit more example.
Yeah, great question. Our experience and what we do is when we go to fixed pricing for compliance, I give the power of that to my client managers because ultimately they're 100% responsible for the client. That's probably the first point. The second point is you've got to be over the metrics on the job. And what we tend to do is give an hourly budget in our daily huddle to the team on that job. So we'll say, look, you've got 5 hours to do this job. Or, so it depends on the client and it depends on the KPIs that you want to achieve. So we're very much metric-driven, Wayne. So in terms of the pricing, and it depends what work you're doing. So, we do a lot of compliance work, so you'll often have price parity with what the previous accountant did. But that drives accountability to, get the client, in the cloud. Can you outsource that job? How can you develop and improve that client and look at all the opportunities for that client? Whereas you're all value pricing, where Blake was saying earlier, okay, well, we can save X amount of dollars and get this efficiency. However, this is what our price is because it's like a success sort of fee in a sense. So we do definitely look at opportunities where we can really value price, and at the end of the day, when you value price or you fixed price, clients have the opportunity to take that to the marketplace to compare that with others. But you know what, there's not that many firms out there in our experience who actually have the courage to go and fix price, and so you know you've got a competitive advantage straight away. You know, we work with clients and look at things like, you know, what's the 5 worst things in any industry, and we just reverse engineer those. So, you know, accountants, you know, it's not done on time. I never know what the bill's going to be. So we just flip that on its head and say, well, you know, we don't do those things, and then that distinguishes you from 95% of the competition.
Yeah, you're right. If you get a chance, go and check Jamie's website out, because I love it, because he's got a guarantee there about his level of services. So it's some really cool things. Blake, I'd love to know the research you did to, you know, how'd you go and work out, you know, one of the biggest things I see is everybody goes, oh, how do I work it out? You know, how do you know, work out the price?
I have to confess that I did not come up with my pricing model on my own. I used a very sneaky method, which I continue to use to this day, which is I go and I look at what all of the bookkeepers and accountants are doing in Australia and New Zealand, and I rip them off. And it works really well.
That's nice to know that.
It works really well because a lot of them are kind enough to put their pricing and services on their own websites for everyone to see. And we know what's working because we know who's succeeding. And they have about a 3 to 5 year head start on the U.S. market, given that Australians and New Zealanders, or Kiwis, right, went to the cloud far sooner. So all we have to do in America is just not be stupid, or not try to reinvent the wheel, and just do what's working. And that's sort of my philosophy, and I hope it works out.
Oh, Blake, I love that. A bit of it's good old-fashioned R&D, you know, rip off and duplicate. And look, it's seriously, it's been working, and one of the things is I can remember when we were, you know, bringing a lot of the cloud accounting products to the market. You know, these didn't exist, so yeah, don't worry, we had to do the first website and then a bit of R&D, and most people. You know, who else would? You know, I'd love to know, you know, how else you worked out on these pricing. You know, the research you did. Jason?
Oh, wow, research. I got to say something really fancy here. I can't say I pulled numbers out of my butt. I can't say that.
No.
You can, I normally do.
Okay. So, what? One
we call
thing.
that trial and error.
Okay, there we go. Thank you. Thank you, Ian. You should have texted that to me or something, so I could have said something smarter. But, you know, really, in all honesty, pricing is very experimental. Which is something that really upset me at first. I thought there was a methodology, and I learned there really wasn't a calculated type system to do value pricing. Though you look for one, so it was pretty upsetting at first. So really, we just didn't know at first that it was so experimental. You kind of just have to make stuff up. Now we actually know that is the process, and so we use that to our advantage. And, you know, can sometimes double prices in a matter of 2 or 3 weeks on some consulting engagements, because it's really just all an experiment of, you know, how you sell, how you change things, how you present the value to the marketplace. Are you talking to the right marketplace? So we did read Ron Baker's books and stuff like that, and of course that really is what pushed us forward. But we're always researching, we're always experimenting. And now I know that's actually how you do it, and so we'll probably never stop doing that. So the research never ends, because you never get pricing right, and it's good to finally feel comfortable with that. Is to go, pricing is you're never done figuring it out, and that feels good. At least now I know when I don't know what I'm doing. Probably part of the other world doesn't know what they're doing when they're value pricing too. So that's really the research we do. It's just ongoing, really market-related research. Client after client is an opportunity to learn if we're too high or too low.
Yeah, there's so many different things like. Yeah, Chad?
I'll say real quick, I think it's comforting what Jason said, that you know, testing it out, trial and error, is helpful for somebody that's looking to go from hourly to value or fixed, and knowing that you can modify it. And go to your clients who you think might be most open to that. You've got some champions, people that are probably open, and it's to their benefit in the long haul. So I think what you're saying is knowing that you can modify it over time, it's a win for all parties.
Mm. I mean, I hear different things out in the marketplace. Obviously Australia's been doing this for a while. People like Rob Nixon just keep saying, "Well, I just keep making the price go higher and higher until they stop buying, and then it drops down $1." And then you look, and then there's weird things. Like I do an hourly rate, and it's 1960. It was going to be 1962. Why? Because that was the year I was born. That was it. And I went, I'll never be able to charge $2,000 a day. Guess what? You can. I've realised I used to charge nothing like that. And people go, why 1960? Because 1962 just sounded really silly. But sometimes you can do that. You've got to do a trial and error. So one of the things is, it's a good question from James. How do you get the data from the customer's viewpoint on what they think the value of the services would be? I actually possibly might flip that around. I think that's how you position the value to the client. The client doesn't know the value until you tell them what the value is.
Well, something important to mention is that if you are too low, then people won't perceive value, which is something that as a bookkeeping service I encountered. I increased my prices and I got more customers. It's counterintuitive, but that's the way psychology works.
I suppose I could actually talk on a client end. I've got an accounting firm that does value-based pricing, and they said to me that I've got a rather large tax bill, and he says your tax bill is going to be this, but I should be able to get it down to this, and it's going to cost you X amount, and it was based on value, and I'm going, sign me up. Now it's possibly only 30 minutes work for him. I don't care. He was the only person that had enough nous to figure out how to handle all the shares and things like that. So to me, whether it was half an hour's work, it was the value of getting the IRS or ATO off. Good. So there's a value. Anybody else want to add to that before we just jump on to the next question?
So I think the question there is, it's like,
Yeah.
so Jason, do you do after action reviews? Because the question is really stemming from what value did you leave on the table possibly, and how did you get that information?
Yeah. I think that's part of the pricing. Some of the unknowns about pricing. There's a lot about pricing you don't know. So when you do identify a price, you really don't know if it was too high or too low. We always do 3 options. That's kind of a foundational tenet to value pricing. So we do 3 options as a requirement when we sell to anybody to give the client the opportunity to choose what's best for them. But it's hard to know. Did you get the right amount? But I like what Wayne and Blake, you guys were saying, is we're the ones that really set the value for what we do. So we say, here's what we're going to give you, and here's the price we want you to pay us, and then the client says yes or no. So we set the prices. The clients don't set our prices. Client may have a budget for what they want to spend, but that really is not related to what our price is, in my mind. The price is what I want to get paid because I know my business model and what it takes to run my firm and the profit margins I need to be keeping. And the client doesn't know all that, so it doesn't mean they have to buy it. But we set the value by assigning a price to it, and they get to say yes or no to it. So they kind of, we set the value, they say yes or no to the value we've determined it to be, I think. That's how I see it.
I'll keep moving on. Like, how did you manage the change management? Like the change management, not externally, but internally. Like, when you get all of a sudden you're going, okay, our practice is going to go to fixed fees, value-based. How do you manage that process? Not externally, but just getting your team on board, because people have been billing by the hour. They've been grasping on their timesheet all year, all their life. Who wants to answer that one?
So I'll just take that. I'll just take that quickly. So that took us a couple years. So we were going from hourly billing fully to value pricing, and so we had to warn our clients and our team it was going to happen. And at the same time, we were moving to be virtual. So there's a date we were going to close our office down. So there was a lot of prep up front we had to let our clients and our team know about. So it fully took us two good years to plan all of that. And I guess I'll say in any business model change, and pricing is a huge disruptive business model change. The clients you have now may not be the ones you keep through the change, and that's okay. The team you have may not be the ones you keep. The services you have now, some of them may have to go away because some services can't be priced in a value way. So be willing to make sacrifices as you make those changes. Just don't be surprised when you're changing things like pricing, which is very disruptive, that it's going to force your hand to release team members, release clients possibly, sell in different ways, get rid of certain pieces of software, cut services that are just more commodity based. So it pushes a lot of change. So we needed a lot of time to do it. So I don't know if that's true for everybody.
Jamie, you went through that change management process.
Yeah, I think the key to is to take your take your key staff on the journey with you. So you really need to involve them in your strategy sessions, in your coaching, mentoring sessions if you use an external consultant, and just get the key players involved, because I've spoken to other firms over the last few years, and if you don't do that right, people will get scared, and some people just will jump firms because they just don't understand it. So I think it's really important to get buy-in. Once you get buy-in from your team, and particularly the leaders in your team, then you can move forward together. I was probably the worst person who would shoot off an email and say, look, maybe like Jason, we're doing this now, and let's do this, on email, and not get any buy-in, and so everyone thinks, here goes Jamie, off again on a tangent sort of thing. So from those days, I've pulled back and say, let's get together and do this together. So get buy-in. You've just got to do it together.
Yeah, I must admit, I work with Jamie's team, and they always go, oh, Jamie's going to another conference, and he's going to come back on the Monday, and he's going to be going, we don't. So now, getting the buy-in from the team, you've got to give them the end game point. One of the things is, it's just a typical change management process. It is a process. It always has been. It's, got to give them the end game point where we want to end. Now, some people might not, sometimes team members don't want us to be in that. That's all right. Sometimes they don't want to go on the journey. That's fine. It's a good way to move them along. We do have a number of questions, but I'm going to hold those to the end, so don't worry. Keep asking your questions, but I just want to keep going because we're running a little bit over time, but if everybody gives me permission, I've just got a couple of questions that are really, really insightful about, how did you go about creating the pricing bundles? Like Blake, you just went and did a bit of R&D in Australia, which is great because it's a long way away. No one's going to find out. Anybody else?
Unless you tell everybody on a webinar, right?
I would add that after we did our research and looked at the pricing options, we did do a fair amount of work internally figuring out what would work for us, right? Because not everything is not all of the offerings or what's included is on the website. And a lot of firms in Australia tend to wrap the tax in with the monthly fee, because I guess you guys file taxes on a more frequent basis, and we do that once a year, and a lot of people don't even get that from the same place. So we had to modify for our purposes, and what I ended up doing was creating an elaborate spreadsheet that attempted to create a model for our pricing, and so it would have inputs and outputs, and I would input, number of bills to be paid, number of bills to be entered, number of transactions, number of bank accounts, and I would try to figure out a model, a mathematical model that will allow me to put in the number of bank accounts or the number of bills and whatnot, number of employees, and figure out what this should cost based on the time it takes, whether the payroll's weekly or biweekly or monthly. So then I had this elaborate model, and I was able to use that to say, okay, well, can I simplify it? Can I make it easier and easier? And finally, we got it down to 3 metrics for the bookkeeping. Number of bank accounts, total volume of monthly expenses, and what was the last one? That's really funny. I can't even remember. But it was 3 things that we had to know to do the bookkeeping pricing. We'll just say that's our secret sauce, is that third.
The last thing.
But then we created 4 tiers out of those 3 variables. and that fit 90% of the customers. So I don't know, maybe that's what you other guys did on this, but I found that to work pretty well, and we did it for payroll and bill pay as well.
Wayne,
That's one of the great things about this, like moving your firm to the future and, utilizing products like QuickBooks Online is that you can, there's a lot of processes that you can now automate, or you can now, you're not having that travel time, so you can do things faster and, more consistently. Jamie, also love to know, your pricing bundles. You've got them on your website so everybody can see, like Blake.
Yeah, look, from that perspective, like with our website, it's sort of a piece of marketing and it gets people in the sense that it's fixed and that's transparent. But to take it further, Wayne, like we do a lot of virtual bookkeeping, virtual CFO work, and as you know, Wayne, we offer every client we see, we offer bronze, silver, gold, and occasionally platinum. And I've been amazed by the fact that new clients have come to us. They've just had their tax done. However, when we approach them, we say, well, look, you can take the silver, that includes bookkeeping. You can take the gold, that includes monthly KPI monitoring, and then you can add the platinum on the end as a bang. You should be surprised at how many people you meet, and they're getting their tax done in Australia, like with compliance, but they've got a bookkeeper here, and they outsource their payroll, and it's cost them an X amount. And we say, hang on, we can do all that with the gold package. And so all of a sudden you've got a $2,000 client who becomes a $10,000 client, and you pick up all the efficiency right through the whole way. So in terms of bundles, always give people options and show them the services you offer, because you'll be surprised that they'll just, like previously they just could have been a compliance client, and all of a sudden they're 5 times that, and you're doing monthly meetings, and because people don't know what they want, you have to tell them what they need.
Yeah.
Jason, I went to your conference in North Carolina, and it was really good. We had you're talking about pricing models, bronze, silver, and gold, and all that type of stuff. Do you want to talk a little bit about that, and especially how people tend to err in the middle one, so they'll actually not take your entry product?
Yeah, so we actually don't have pricing bundles, so we do price each client individually, which takes a lot of time. So our sales processes are very slow and long, which is sometimes hard. But like Blake, we do have a big spreadsheet. It's not as detailed into the transactions that we do, since we do value price. We try to price, like we try to be on the very high end of our market. So we get about 50-60% of the people that we price, which is kind of a good number for us. It helps us to grow about at a right pace, depending on the team we have to find. So we do have to have a spreadsheet that we use, because the spreadsheet is used then by my partner to craft, contracts and then scope out work inside of our workflow systems and things like that. So I think you do need some kind of tool internally, like a spreadsheet. But again, the spreadsheet doesn't have prices on it. It's kind of whatever. And since I do all the selling and pricing, I kind of know just in that initial value conversation, which is the first conversation you have with a client, I kind of know where they're going to fall just by listening to them probably in the first 5 minutes. And anybody that prices a lot can probably do that. So then you start crafting things around what they may buy. And there's a lot of psychology to pricing, like you mentioned, Wayne. It's if you give 3 options and you kind of know going into it about 85% of the people are going to pick the middle. It's kind of nice knowing that. Just as a statistics mindset, you can kind of price that in a way to win for you and for them. So again, it's very, very experimental, and each one of our clients is totally priced separately from all the others. So in a way, that's hard, but it's also gives us we can do a lot of fun things. We can double our prices overnight if we want. Just kind of play with it and see what happens. So.
Chad, do you want to give us any more feedback, and then we're going to got 2 more questions to go?
Yeah, I think it's a good opportunity to include your clients if you're looking at doing, pricing bundle or kind of what we're talking about. Ask your clients what is it that you want, what they want in the bundle. Sometimes I remember looking back, and we were kind of putting bundles together, making decisions kind of in a vacuum, thinking that's what they wanted, only to learn actually that's not the case. And so, having feedback early on in the process helps you determine what makes sense at the different levels, and I'd highly recommend that.
Okay, I'm going to quickly move on, because how did you inform your clients? How did you go out there and tell the clients? Jamie, all your clients were on hourly, and you've got a big client base. How did you go about that process of telling them?
Yeah, about 5 years ago, Wayne, I basically just went out and visited every client, every A and B and C client face to face, and basically told them about our guarantee, and that I needed to change for a host of reasons, and probably in the process, taking what Jason said, probably lost about 5% of the clients. Part of that process too was I didn't want to. The firm got to the size where I just physically couldn't, answer every email and take every phone call. So over the course of 12 months, we went through some rapid change, and that was, handing over the clients to my client managers, and also part of that was fixed feeing all their fees and explaining what our business model was and why it would benefit them. So we sold, I went on sort of 4 or 5 points, and I said, this and this will benefit you. However, the one thing is, we'll fix fee, and also 95% of our fees are paid up front as well. So, I really had to sell the whole thing, and fixed pricing was just part of that overall offering.
There's a couple of little things that the audience might not know about. In Australia, and I don't know if this happens in the US, we rank clients A, B, C, D. So that's kind of like a level of how much money you're making from them, how good they are, potential new fees. D clients are the ones that you're going to be offloading at the end of the year. Steph Hines is an expert at getting rid of all her D clients each year at the end of the year and getting a whole new batch of clients, and she has a really good process for that. So that's really, really important. So I just wanted to talk a little bit about that. When you're informing your clients also, because it's one of the things is, what's the benefit to you as well? Because there's 2 benefits here in that positioning conversation, because I don't think people are understanding that the small business owner loves fixed fees or value-based pricing, because all of a sudden I don't get this sticker shock at the end of the year of, I have no idea how much it's been for the last year. I've just could be racked up this huge bill, and I just don't know. Jamie, drill down into some of that a little bit more about that conversation.
Of informing the clients, yeah. Look, in my experience, I went to the clients and I said, I'm basically changing my business model. And so the points that I went through was, okay, number 1, we're going to schedule all your work. Number 2, we're going to collect all your work up front before we start it, because obviously we're fixed feeing, the accountability is on us. The quicker that we can do it, the more money we will make. Number 3, we're going to fix your fee. Number 4, we're going to have a fast turnaround. So none of this business about your work being dropped in August and getting done in January. We're working about a 3 to 4 week turnaround for 95% of our work. And so it was just selling it, Wayne. It was really having the conversation face to face with the client, particularly existing client. New clients is a no-brainer. In 5 years, I've never had one client even question the model, and we ask for payment up front before we start the job. So existing clients, look, it's a bit more tricky. You've really got to have a good trusting relationship, and they've got to understand where you're coming from. But new clients that are referred to the firm or through your marketing, it's not even a question. That's just how we do business, and they can go up the road, as I always say, and look at our competitors and say, well, look, what's your offer? Oh, well, we'll time-based bill you. It depends how long the job takes. Or how long, how fast will my work be done? Oh, well, it'll take 2 months. Do you schedule my work? Oh, no, just drop it in whenever. It's just really selling it, having clarity about your production, your team, and then and delivering on that guarantee. Yeah.
So a couple of things here, so just for the audience too, to understand that Jamie Johns his office is in a small regional town, so there's only a few accounting firms there, so it's pretty easy to, when he says walk down the road, you can just walk down the road to the next accounting firm. So it's one of the things is no more cash flow problems I show straight away. Like it always surprises me when I see accounting firms that are writing off WIP and have debtors in the 90 days, like bizarre concept. I can't understand that. Does anybody else not? Jason, I assume you no longer have debtor issues.
No, yeah, it's it's required that we draft our clients. So you can't be a client unless we draft our work, and which is how a lot of pricing firms do it. If you're going to go ahead and price and you know the price, why not go one step further and be bold enough to ask for their banking information and then pull it out of their bank account? So a lot of firms have figured that out. That's a pretty cool part to this model, and you can actually go as far as making it a requirement, which is what we've done and a lot of firms here have done. But Jamie did bring up some really important things that when you are implementing pricing, it really changes for your existing clients compared to your new clients. So if you do want to start trying pricing, doing it with new clients is the way to do it. It's really harder to sell to existing clients. You got to spend a lot more time and rechange how you've already been pricing them by the hour. You got to retrain them, and it just takes a lot of time. Or you could just fire all of your existing clients and start over. You could do that, I guess, but then it hurts your cash flow.
Stop nodding your head on that one.
kind of wrecks your cash flow. So,
look, we're going over, so I'm going to move off the last couple of questions and just quickly wrap up, because I want to thank the audience for taking so much time. We've gone over, but it's just so much great content here. I'm going to go through each of our presenters today and say, look, if you had your chance again, what would you do differently? So this is your chance, Jason. If you had your chance again, what would you do differently?
I don't get to go last. I have to go first, don't I? No, I probably would do it. I probably would do it sooner. So I think in 2008 we started experimenting with value pricing, and I probably would have done it a lot sooner. It's just that pricing change has transformed everything. It's forced our hand to change every single thing. Even our team model, how we pay our team a percentage of our revenue. Even our team said, why do you pay us hourly if you value price a client? Why don't you value pay us? And I thought, good thought. So, even the team pay is tied directly to the client's pay, and that's been an amazing change for us. So I probably would do it. Sooner. That would be the main change I would make.
Jamie, what would you do differently?
Yeah, absolutely. To me, Wayne, if I had known, back then what I know now, I would have been all about the business model. So you just like most of us, we come up to the ranks and we just accept what the partner or what the previous firm did. So, in my experience, I would just would have done it earlier. Just would have done it earlier. And I think the key to it is to remember the 80-20 rule. There's always going to be those exceptions in whatever area where the 20% you'll have to personalize the exceptions and still get a successful result. So Wayne, I work heavily with Ed Chan, my mentor, and he's always on to me about it's not what you do, it's how you do it. So there's successful firms out there who bill by the hour. But they manage client expectations very carefully, and I think that's the final point I made is if you're managing your client's expectations and you're in alignment, and you can't go wrong. So that's probably the final thing I'd say. But yeah, do what's right for you, and it's not the what, it's the how. Yeah.
Blake?
I think I would have been a lot crueler to my clients when I switched. And what I mean by that is that I had a really hard time pricing them high on the high end of what my range would be. I would always, and Jason talked about this briefly, he mentioned that he always goes for the high end. And I think I've heard him write or talk about this in the past. And I really think that's what we ought to do. If we have a low and a high price, we should go for the high price. And we're not doing a disservice to our clients. We're doing a favor to ourselves and to our firms and in the end to the clients, because when we're getting paid what we want to get paid, we're going to do good work for them, and they're going to get value out of that. And what I did when I first switched clients over is I was nervous about it. And so I priced them on the low end. I thought they might not go for it. I didn't want to lose them. I wanted to be nice, but it ended up not working out. Those clients who I priced low, I ended up not doing such a great job on, and a lot of them didn't stick around. So we've got to be tough.
Yep, that's good. Jeez, that's a nice way to end that one, Chad.
Yeah, I think what Jamie said earlier, it's all about expectations. We talk a lot about, no surprises, and if looking back, I think I would have asked help. If you think you might be wanting to move to one of these, value fixed hybrid models, ask firms that have done it. Ask sooner. Ask for help. We've obviously survived. We've either started it with that model or we've converted to that model, and most of us still have hair. And so, we're here to say we do believe there's value in it. So it's a matter of asking firms that have done it. I think people are more than happy to help.
Yeah, I think some really good outcomes there. Like everything I hear, and I've been hearing this a lot, is everybody says do it earlier, because at the end of the day you can't create time, and the traditional time billing model means that you know how much you're going to make this year, next year, the year after for eternity. Like it's and you might be an incremental increase. You can't create. Where the great thing with value can create value, and it also drives like Bake wanting to be more efficient and driving new technology. How can do it smarter, faster. One of the things I can recommend too is go to conferences. Go to QB Connect. You've got to go to those conferences. Go to Jason's conference. I'm a conference junkie. I will go to a letter opening basically, because that's how you learn from your peers. Because there's so much happening out there in the marketplace. Go to these conferences anywhere in the world, because you get so much information. The information exchange. I mean, Jason's. I got to hear Ron Baker for a good half day, which was so valuable. And I'm sitting there, and it was good because I got to chat to him about my thoughts about the marketplace and that. So it was great information. So go to all those big conferences. That's my big takeaway. I'm going to hand back now to Ian, who will just quickly wrap up and talk about the next webinars.
Yep, and then also, again, we may have it's time for a question or two, so I'll let you look at the questions pool over there, Wayne. So first, let's go to the next slide. This wraps up the February webinar series on value pricing. We move into March, which is really about practice efficiency, and we're really, we're going to kick off that on March 9th with Intuit's Firm of the Future on maximizing your efficiency across your email, your clients, and your team. We're also going to do a panel discussion at the end of March around the top 10 things that efficient firms do, and we've got a slew of different articles on how to ultimately get your practice to the next level. Again, if you want to learn anything more about Carbon or get a demo or an intro, go to carbonhq.com/events and firmofthefuture.com for Intuit and a lot of the stuff that they've been putting up. They've been adding a lot of content, so just keep checking out their website. Again, firmofthefuture.com. Go to the last slide. And wait for it. Again, Carbon's the place to collaborate with your team, look after your clients. If you've got any questions that came up that the panel didn't answer or you want to have answered, you can ask both Wayne and myself. Our emails are up there, Ian@CarbonHQ, Wayne@CarbonHQ.com. And that's pretty much the end of it. I think we've got a couple minutes here, and we've got a couple remaining questions. Wayne, do you want to field those, or do you want to... And all those out there, if you want to ask a few questions more, this is your time to do it.
Yeah, and once again, I wanted to just thank first Jason and Jamie and Blake and Chad, giving up an hour of your time. I understand it. It's an hour billable time you've given up. And seriously, if you haven't been to Jason's event, I do a lot of events, and his was awesome because it was it's just a lot more intimate type event. The speakers had a really good amount of time, and also the speaker on that last day, the guy that one of your clients, the gym guy, I just thought was fabulous.
Yeah,
Completely left of field.
Yeah.
And still had a big impact. And then I can still remember QB Connect. You would not have thought that Oprah would have a big impact, and I just thought she was amazing because of, what's your intention? And it's so funny now. Every time I write an email now, I'm always thinking about what's my intention in my email. So it's really interesting. So you can get some things, big points like that. So we've got some questions. Adam Ramage. Adam, good to have you on, Adam. Hey, what are the metrics your client managers are responsible for? Jamie, sorry.
Yeah, good question. Average hourly rate. So one of the key metrics per job, average hourly rate, and also gross profit, GP.
Oh, cool.
Per job.
James also has thrown this out. It seems like Ron Baker goes from clients' values and go from there. Jason, would you elaborate on that?
Say that
This
again.
is from James.
Yeah,
It seems like it goes from clients' values and go from there, like client value, I should say.
Okay, I guess what he's saying is when you value price, the first thing you want to do is try to identify what the client values. Yeah, that's the main thing, and you get better at that. Chad mentioned that earlier, where as accountants we kind of presume a lot of times what they want to buy, and a lot of times we can be wrong if we're not careful. So in value pricing, there's this thing called a value conversation, which is the first time you meet with the client, and that conversation is really all about the client. It's not about you and what you can do. Sometimes we try not to even talk about accounting and taxes, and that just to see if we can get through a conversation where we've only talked about the client, and just posing really good, strong, deep questions about where they want to be in 2 years, help them unlock new thinking about what they want to become or what they think they could be if they had the right financial partner. And when you unlock all those things, what you're doing is you're hearing a lot of things you can price. So you can, a lot of times we'll hear something new and we'll actually make up a consulting engagement and we'll, sell it for $7,500 and they buy it. And you're like, wow, that's kind of cool. But you had to unlock what they valued, So you just created value that has a price attached to it in the middle of thin air. But you have to listen to what the client values.
That is, Jason hits the nail on the head, and it's something that is when you're doing what I call, when I'm meeting a client, it's a discovery meeting. It always has been. I call it a discovery meeting, and the golden rule is you've got 2 ears, 1 mouth. Shut up. Just questions, and at the end of the meeting, you should be recording your time. And how much did the client talk, and how much did you talk? Now, if you've talked more than the client, you've lost that sale. If the client's talked more than you, you've got a half a chance of getting that sale because you're now listening and actively listening to the client, throwing back questions to them, and then you've got an understanding. And the client goes, "Oh, that person really got me. Really understands everything about my business. I could be thinking about what I was doing on the weekend."
30-70, Wayne. 30-70. Talk 30%.
Oh, I like that one.
70.
Oh, I'm going to steal that one. Chad, thank you for that. We'll just go back to you, Jason, one more. James has got one more question, which was, do you change the documentation each time at certain intervals? What do you mean?
Is that for the proposal? Maybe?
No, so this is on ongoing work. If you've got ongoing work,
Ongoing.
how do you
Sorry.
manage change orders? Do you do that at the time of the change, or do you do a summary charge? at a certain time break or time interval or at the end.
Yeah, no, that's good. So one thing all these firms probably know is when you price up front, you have to be really good with documenting your scope and contracting that and then managing the scope like
Absolutely.
in a big way. That's like a whole nother position in your firm that you don't realize you need until you do it, a project manager basically. There's a lot of training and teaching to your team to make sure they're not doing work outside of the scope of the originally agreed to contract and price. That's a big deal to manage. So if they come up with something they want that's not in the contract, our team's pretty good about asking me, like, did we price for that? And then we'll just give them an addendum to their contract with an additional price. And so but that pricing is not as hard as the first one because they're already a client. We can figure that out over email typically. Whereas a first client, we always present those in person every time to a new client. But yeah, you got to manage scope like more than you did when you were hourly billing, big time.
Yeah, because you can get scope creep. Look, we could talk for hours on this, I know, because this is a whole conversation too about how you actually present this to clients. You know, the worst thing you could ever do is go and do this in a boardroom. That's the worst way to present to a client because it's confrontational. They're on one side, you're on the other side. It feels like it's a deposition. Go out and have a coffee, sit side by side. The golden rule in sales, always sit side by side next to the client, don't sit opposite. Tons of these things. We can give you lots of those later. Make sure you visit the Carbon website and look for all the other events that we've got. Register for a preview. And anything else you'd like to finish off with? I want to again thank my guests. So much insight here. So thank you so much.
Again, appreciate Chad, Blake, Jamie, Jason. Full hour. Appreciate all the insight that you guys were able to give. And hopefully you guys had a lot of fun along the way. We did. And just want to say thank you from Carbon. Thank you from Intuit Firm in the Future. Appreciate it, guys.